All right, welcome to this week's breakout watch list from June 20th to the 23rd. Even though this is a shortened trading week with today being off for Juneteenth, that doesn't mean that there's no setups. And in this video, I'll be covering the 10 setups that caught my eye the most. Each of these stocks either have strong fundamentals, strong technicals, or volume patterns that lead to uptrends. But before we get started with the setups, this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stocks. And before I share the stocks that I'm going to cover in this video, I want to take a quick look at the market. Right now you have all the indexes, QQQ, SPY, Dow Jones, along with the growth ETF, IWO, and ARK trading above all their key moving averages. Their moving averages are in uptrends, and the order of the moving averages, you have price, then the 8-day, 21, 50, and 200-day. Obviously, the market's been very, very strong, and especially with tech being 10.6% above their 50-day moving average. I didn't put too many tech names in the watch list today, expecting either sideways action or a pullback coming next week. With that in mind, here are the 10 stocks that we'll be covering in today's video. But I don't want to spend too much time here, so let's jump right to MarketSmith. The first stock we have is ARLO. This is in security software, which is the 60th strongest group out of 197 right now. This is a stock that I've traded a couple times this year, and as you can see, it's had not one, but two very high volume moves around earnings. The first one jumped the stock up 50% on 1,718% the average daily volume. Then we trended upwards for a couple weeks, and then I had another move up 27% on 483% the average daily volume. So two very large moves on heavy volume. From there, kind of traded sideways, rallied up to $10, uppercut that, 10.12 was the high, and did so again on the 7th of June, 10.06 there, before pulling back to the 21 EMA, which is perfectly healthy. I know the market's been in rally mode, so this looks like relative weakness. It is relative weakness compared to the indexes. But if we go to a weekly chart really quick, you can see that as we rallied from $3 up to $10, if we look to the left, you can see that this is where some rallies have stopped before. So we do have some overhead resistance right at this area. So while the market continued to rally the last couple weeks, it makes sense that this was pulling back. And it's not like this pulled back on overwhelming volume. It's not like it broke the 21 EMA or even the 50-day moving average. Right now it's come down, tested that, and held on each of the pullback days. It's also held the HVC, the high volume close from the earnings day on 5/12. That close was $8.97. It's held $9 on the pullback here. So very constructive action, even though recently it showed some relative weakness. So with this, you could draw a downtrend line, but I'm just looking for a break over Friday's high, 961 as a potential entry point. Or if we do get a pullback in the market, trying to build a position around $9, around that HVC 897 for ARLO. The next stock that we'll cover is an IPO, BRZE. This IPO'd right at the end of 2021, so kind of doomed to start as we started the bear market there, but did put in a lower low, and then from there, a higher low. And once we go to the daily chart, you can see, similar to ARLO, this did have a nice pop on earnings, up 16%, 630% the average daily volume. And although it didn't close very strong in the range, what we did see was relative strength throughout the rest of the week, where trading was, for a majority of the time, above the HVC there. So on Friday, while the indexes pulled back a little bit, this closed right at the high of the day, up 0.5%. So thinking if the market is going to pull back, I want to see it hold that HVC level. That would be $39.43. Also, a secondary area, $40. You also have the 8-day EMA catching up right now at $39.66. So right around that $40 range on a pullback is where I would want to see some buying support come in for this. If the market continues to rip higher, which even though it's a little bit overbought, it could continue doing so, I would just be looking for a break into new highs here, right around 42.84 for BRZE. Next is a uranium stock, CCJ, and for full disclosure, I do have a small position in this, but we'll be looking to add to it this week. So this is another one I want to start off on the weekly chart. You can see kind of a VCP action here, where each of the pullbacks get tighter and tighter and tighter, and we've had multi-month base here, looking to break, well, it did break into new highs recently, but immediately got rejected. I think that was Tuesday last week, on the 13th there. From there, bounced at the 8-day EMA, nice high close in the range for the week, and building a pivot at $32, both Wednesday and Friday's high, right around that price. So this is one, not a tech stock. If tech stocks pull back and digest their moves, which would be perfectly healthy, this doesn't have to do that. It's right at the top of the range, so looking at $32 as a potential entry point. The next stock that we have is EDU. This is a Chinese stock, so if you don't trade Chinese stocks, that's fine, just jump to the next one. But I did want to go back to the Performance Insight platform and show you the 1 week performance, just to show you that Chinese stocks, out of all the ETFs that I track, KWEB was up the most, up 5.8% last week. So if this is any indication of what's going to go on next week, we definitely want to have some Chinese names on our watch list. Now going back to MarketSmith, you can see that this bottomed out at 840 in March of last year, and since then has been in a very strong uptrend. It has had a couple weeks where it shakes out the 50-day moving average, but this price action right here, the last 2.5 weeks, is the tightest it's been all throughout this consolidation period. So we did have a 1-2 day shake under the 21 EMAs and the 50-day moving average before popping up on Thursday, and nice tight price action on Friday, up 0.7% while the indexes were down. So MarketSmith has already shown you a cup with handle, 36-day cup length, depth of 24%, and a handle of 8%. Shows you right here the pivot, so we'll just go with that. $43 is a potential entry point for EDU. Next stock we have is IOT, and this is another one that we want to look at the weekly chart first. IPO'd, when was this? Back in 2021, similar to BRZE, but this is already right near its highs, where BRZE is just coming off its stage 1 base. So if we have to pick between the two, we want to pick the stronger one. And you can see this stock has a 98 relative strength rating. Another one that had kind of 2 earnings bumps like ARLO did. One that I did trade on the second earnings day here, but sold into strength the second or the third day, and then also when it broke over $30. Just expecting that the market was going to pull back a little bit earlier, but it's been a little bit stronger than I expected. On Friday, this had what was looking to be a pretty rough candle, breaking through the 8-day EMA, but rallied right off of 27.5. The low was 27.73, and then closed back above the 8-day EMA. This volume, while it looks heavier, there's quad witching day, so not as credible volume right there. But if this can just consolidate above 27.50, trying to accumulate around there and then using a stop below $27 would keep your risk very tight. And if this is a stock that's going to be a true market leader, which so far it's showing all the cards that it is going to be one of those, this is one that we want to find a way into. So for me, I'll be looking around that 27.50 area on the pullback, especially if the market's weak and this is holding that key area. That's going to be something to watch for IoT. Now getting back away from tech stocks, we have LTH. This is Lifetime Holdings Group, a health and fitness center. Also another IPO that's right near its previous highs. Now one thing that I wanted to point out this on the daily chart is you can see a lot of upper wicks, meaning buying pressure came in, it hit this 2140 area, and then sellers stepped in to push it down. Not once, twice, 3 times, 4 times. So if I'm trading, I don't want to be getting in right at this 2150 area, 2140 area. I want to get situated around $20 so I can take my first sell a third into strength around this area where so far historically selling pressure has overwhelmed the buying pressure. So this has been nice, pulled back. It's under the 8 and 21 EMAs, but still above that 50-day moving average. That's going to catch up this week. So getting in around that $20 with a stop under the 50-day moving average will get you a nice tight risk entry point and then allow you to sell a portion into strength at 2140, 2150 instead of buying at 2150, hoping that this is the last time that selling pressure is going to overwhelm buyers for LTH Lifetime Holding. Next we have MDB, and I think this is going to be on a lot of people's watch lists because it gapped up 180% earnings per share growth, 29% sales growth, 12% after-tax profit margins, up 28% on 520% the average daily volume. And from there has traded sideways. That's perfectly healthy. Looking to the left, you can see some overhead resistance right at 390. So it makes sense that we went up to that area, paused, let that 8-day EMA to catch up. We had an inside candle on lower than average volume on Friday, down 1.4%. This is one where we can go into maybe a 30-minute candle to see if there's a downtrend line. But honestly, I'm just looking at 390. That's where sellers stepped up once, twice there. Or if you're trying to play this similar to Lifetime, which I don't think you need to because it's been trading so tight, I would just be watching that 390 area. But if you want to be buying around the 8-day EMA and then just get your stop under 260 or 360, the low of this gap up, that's another way to play it for MDB. The next stock that we have is NCNO, and I'm going to be treating this kind of similar to how I traded IOT, where it had that gap up on massive volume, strong closing range, and then the next day we held the HVC and then just ripped out of there. I'm hoping we see the same out of NCNO. We had overwhelming volume on Friday, 802%, and that was not just quad witching volume because we also had the price action to go with it, up 24.5%, closing within the upper half of the daily range. And if you look to the left where we've had sellers step up right around 31.70, that's right where we closed on Friday. So if two different ways to play this, if we gap up to start the week on Tuesday and then pull into the HVC, getting situated around 31.69, 31.70 with just a 3 to 5% stop loss depending on your risk tolerance, that would be ideal. Otherwise, if we open down, getting in around $30 and getting your stop under $30, call it $29, 3% risk right there. That's another way to play it. And then you could be adding through the HVC, the high volume close at 31.69 there for NCNO. All right, we got two more stocks for you. Next up is NNOX. This is one, had massive volume through the 200-day moving average, continued to rally all the way from $5 up to $22 in a short time period. From there, has pulled back to the 21 EMA. This is one that tends to rally when the market pulls back. You could track this, got two more stocks for you. This next one is NNOX, another one that came off the lows on massive volume and continued to rally higher. Went from about 570 all the way up to 2270 in a short period of time. And if you look at the relative strength line, you kind of notice that this stock tends to rally when the market pulls back and vice versa. While the market's rallying, this doesn't do too much. So it makes sense that this pulled back to the 21 EMA while the market continued to rally last week. But we're getting some tight price action right around a key moving average, both the 8-day EMA, which it closed right above, and the 21 EMA, which was the low of the day on Friday. So this one, probably want to look at this on strength through $20. Or if you're accumulating at this current price, right around $19, you can keep your stop under the 21 EMA, under $18, and your risk would still be within 5% there for NNOX. And the last stock I want to cover today is PRIM. This is in building heavy construction, the 47th strongest group out of 197. On a weekly chart, you can see we have finally cleared this overhead resistance. Nice low volume week last week, just consolidating after the breakout. And back to a daily chart, you can see riding that 8-day EMA, closed right on it on Friday. This is one we're not trying to make too complicated, just a break over $30, a break over Friday's high, 30.06 as a potential entry point, and get your low or get your stop under the low of the flag here, around $29. So very, very tight stop, below 3% or right around 3% risk on this one. And everyone's been talking about semiconductor stocks, but home builders over the last 10 weeks are also the second leading group. So with ITB up 17.3% the last 10 weeks, it's still something that we want to have on our watch list. And this is a stock that has broken out on above average volume, pulled back on that 8-day EMA as volume dried up, and now we have a pivot right at $30 to take care of. So that's PRIM. And that's going to be your breakout watch list for the upcoming week. If you guys enjoyed the video, please do me a huge favor and leave a like along with subscribing to my channel. I hope you have a great week, and I'll see you guys in the next video.